Dalal Street Week Ahead vertical bar US, India inflation, FOMC minutes, Q4 earnings among 10 key things to watch for. The coming week could see a slight positive movement in the markets due to a series of events ranging from TCS, Tata Consultancy Services, Q4 FY24 results, the US Fed minutes, Indian and US inflation figures, and more. Markets were volatile in the first week of April but ended on a positive note. The Nifty 50 touched an all-time high of 22,619 and ended the week above the 22,500 mark with a gain of 0.84%. The 30-share BSE Sensex rose 596.87 or 0.81% to finish at 74,248.22. On the inflation front, the Monetary Policy Committee, MPC, kept the repo rate unchanged but voiced caution about climate shocks, both domestic and global, which could instigate food price rises. Vinod Nair, head of research at Georgette Financial Services, said there is a subtle positivity in the Indian market, bucking the weak global trend aided by positive manufacturing PMI, Purchase Managers Index data and optimism about the upcoming Q4 results. Buoyancy of the broad market indicates the strength will continue in the short term. Meanwhile, strong US economic data has cast doubts on the Fed rate cut in June that the market was expecting. The Nifty 50 traded in the 22,300 to 22,600 sideways range throughout the week ended 5th April, making a fresh all-time high of 22,619 on 4th April in the process. Nifty tested the important 22,500 level all the days during the week and faced strong resistance from the call writers, bears, around this level. The index ended at 22,514 on Friday 5th April, up 187 points on weekly basis. Despite the fresh high in the current week, there are no visible signs of momentum picking pace. India VIX falls from 16.74 to 11.34. Falling India VIX is one of the reasons for the steady rise in Nifty. The cooling off volatility has given major comfort to the bulls. India VIX made a high of 16.74 on 28 February and has been in a downtrend trajectory since then, closing at 11.34 on 5th April. With the country gearing up for the polls and the start of the Q4 results season, rise in the VIX can't be ruled out, which can give discomfort to the bulls. Primary market to be a bit quiet next week as action only in SME segment and not in mainboard. The primary market is going to be a bit quiet with no major action in the mainboard segment, though the SME section will remain active in the coming week starting from 8th April. 3 IPOs, mainly from the SME segment, will hit Dalal Street next week, but there will be no new public issues in the mainboard segment. DCG Wires and Cables IPO. Copper Cables and Wires manufacturer will open its maiden public issue for subscription on 8th April, with a target to raise 49.99 crore rupees. The price for the offer, which closes on 10th April, has been fixed at 100 rupees per share. It is a fixed price issue comprising only a fresh issue of 49.99 lakh equity shares. The Ahmedabad-based company that supplies copper cables and wires for transformer manufacturers will utilize net IPO funds. Hitech Ventures IPO. Uttar Pradesh-based Green Hitech will be the last public issue from the SME segment, opening next week on 12th April and closing on 16th April. In fact, this is the smallest issue in size amongst these 3 IPOs. It is a fixed price issue having a price of 50 rupees per share. The petroleum-based products trader intends to mobilize 6.3 crore rupees through public issue, which will be utilized for working capital requirements, general corporate purposes, and IPO expenses. Bharti Hexacom, the subsidiary of Bharti Airtel, will be the only listing next week on 12th April in the mainboard segment, while there will be total 5 listings in the SME segment. The company that provides mobile, fixed-line telephone, and broadband services in Rajasthan and North-East telecom circles in India closed its Rs 4,275 crore public issue with 29.88 times subscription on 5th April. The positive market conditions, strong parentage support, and healthy IPO subscription numbers may be supportive factors for the listing price. Nifty's pivot is on weak footings, convincing close above 22,500 must for next leg of rally. The Nifty 50 traded in the 22,300 to 22,600 sideways range throughout the week ended 5th April, making a fresh all-time high of 22,619 on 4th April in the process. Nifty tested the important 22,500 level all the days during the week and faced strong resistance from the call writers, bears, around this level. The index ended at 22,514 on Friday 5th April, up 187 points on weekly basis. Despite the fresh high in the current week, there are no visible signs of momentum picking pace. India VIX falls from 16.74 to 11.34. Falling India VIX is one of the reasons for the steady rise in Nifty. The cooling off volatility has given major comfort to the bulls. India VIX made a high of 16.74 on 28 February and has been in a downtrend trajectory since then, closing at 11.34 on 5th April. With the country gearing up for the polls and the start of the Q4 results season, rise in the VIX can't be ruled out, which can give discomfort to the bulls. FPIs withdraw 325 crore rupees from Indian equities so far in April. FPIs have turned cautious as they pulled out 325 crore rupees from Indian equities in the first week of this month owing to relatively high valuations and the upcoming general elections. The net outflow came after a staggering investment of 35,000 crore rupees in March and 1,539 crore rupees in February, data with the depositories showed. Commodity markets to focus on US inflation, ECB policy meet next week. Gold continued its relentless upside while equities wavered as the latest labor data quelled urgency for the much-anticipated first rate cut and a rally in oil prices added to inflationary jitters. Data released during the week ended 5th April showed signs of a slowdown in the US labor market, with easing jolts job quits and a strong manufacturing PMI was countered by ease in services PMI. In the latest Fed speeches, Minneapolis Fed President Neil Kashkari floated the idea of no rate cuts in 2024 if progress on inflation stalls, with the economy remaining robust, while several others still expect the US central bank to cut rates 3 times in 2024. The comments followed Fed Chair's speech earlier this week, when he reiterated that rate cuts might be appropriate at some point this year, even though there's no hurry. Mixed Fed comments, signs of a resilient US economy, and rising oil prices led to rate cut uncertainty.